controls are a significant reason for increasing risk. So in summary, auditors have to trust but verify. We saw that when we talked about professional skepticism. You have to be skeptical. You have to evaluate. You can't have tunnel vision. So the point of doing planning and having an engagement team planning meeting and talking is to keep in mind what's going on. You have to audit your client and evaluate that evidence in the context of the information that you gather during the planning phase. So you can't just say, okay, I'm moving off to this and moving off to this area, and then everything else is everything. You know, that happened already, now I'm over here. Right? You have to evaluate in the context of the information. So you're always updating your risk assessment. Okay, any questions before we move off fraud, risk? Any questions about the fraud triangle? So you want to make sure two things, a couple of things, take away from here. You have to understand the difference between employee fraud and management fraud. What we mean by misappropriation of assets versus fraudulent financial reporting. You have to understand how would management be able to perpetrate fraudulent financial reporting? What gives rise to that? What is it about accounting standards that would allow management that would give management the opportunity to do that? So you want to definitely understand the components of the fraud triangle and what each of those components represent. So understanding what factors give rise to, say, for example, opportunity. Right? One thing, for example, is ineffective internal controls. If you have ineffective internal controls, that provides a feeding ground for fraud. Not to say fraud will happen, but it creates this opportunity for someone to commit fraudulent activities and it not be detected. Right? Another thing is autonomy. I'm sorry? Right, there's autonomy, lack of oversight, right? That again gives rise. So understand the components of the fraud risk triangle and what factors give rise to that. Understand when we talk about misappropriation of assets, what gives rise to that. Yes, Jimmy.
I think the third part was attitude.
Yeah, attitude, rationalization, opportunity, right, and motivation or incentives. Probably the most difficult, fraud is, and the takeaway, the fraud is difficult to detect, right? Because no one's going to tell you they're committing fraud, right? So this is where you have to be very vigilant and very skeptical and aware. You know, so you're looking, and the challenge too is you're going through an audit. It's easy for me to say that, and as we're sitting here in a class and you know, we're talking about it, but when you're on an audit is dynamic. There are like 500 things happening in any one day, right? And you have information coming at you from every direction. So your attention is diverted easily. So that's why it's always important for the audit team to kind of keep in touch and everyone to share. So most times you're all sitting in the same room anyway, but it's important to have conversations about what's going on or what you're working on or exceptions and things that just don't seem to make sense, right? So, because you could have information that your team member doesn't have that impacts his or her area, that might cause them to look at their area or evaluate that evidence slightly differently. Right. Any questions? Okay, let's talk about internal controls then.